Jai, hi, welcome on board. We all, of course, know the fact that the kind of rally we've seen on D Street has been fueled by the outcome of the exit poll over the weekend. But over the next few weeks, how are things likely to turn out? Let's assuming, that this is what it's going to be even on the D-Day as far as the verdict is concerned.
Hi, good afternoon. Thanks for having me on the show. I've been bullish on the market since 2013, and there's a very important change that's happening in the market. And people who've been having positions since 2009 and 2013 will be well off booking profits on their positions, because we are in the last stages of this bull market, and this doesn't mean that tomorrow the markets are going to start selling or something like that. You just have to be prepared. The market, once the market turns around, it's not going to give you time to get out of the market. So that being the case, the positions that you have created from a long-term point of view, you're better off raising at least 50% cash. I've been projecting a level of 12,400 for the Nifty for the last several months now, right through the ILFS crisis when everybody was bearish on the market. I said, no, this is just a correction. It's heading for record highs, and it will come by April. No, and by April we had record highs, but we are still short of 12,400. So the market could fall short of that level, but you need to have a complete change of mentality. And I'll also predict something else. As soon as the results are out, I'm sure some fundamental analyst of a big institutional broking firm is going to come out with a report of 15,000 Nifty or 20,000 Nifty. That will be a trigger for you to understand the markets are peaking. So, watch out for this. There are telltale signs that the markets are at the last leg of the rally. If you still want to be in the market, wear a trader's hat. Don't build portfolio.
Right, but as you're saying that this could be the last part of the rally, isn't last part of the rally the most sharpest one? Usually,
there is possibilities of overshoot in the last leg of the rally. So, as I said earlier, you don't want to be on the right till the last day of this market. You just want to leave some on the table. That way, you'll be better off being out of the market and watching the fund from a neutral point of view. Yes, sometimes it does get spiky at the last leg. But what the market is doing now, each time it's crossed the record highs. First it crossed 11,700 and change. It just went up by 100 points. Today it went up to record highs. It's not able to sustain that. That is another indication that this market is seeing some sort of fatigue, not being a complete exhaustion, but it is seeing some sort of. Usually when fresh record highs are made, there is a definite follow-through, and that follow-through so far is missing. So, already there are some early signs that you need to be maintaining some level of caution, or at least, the very least, you need to be getting defensive.
Right, but, how would you approach this market? Would you just wait and watch for it to top out, or how would you approach this market, when you want to go into this market at this point of time?
Yeah, that's a good question and a very fair question. Until this point of time, whatever positions you took, the stop losses that you maintained or the level of demarcation that you maintained that you were wrong, you could have been a little more flexible about it, and you knew that long-term trend will assert itself, and the stock prices will come back at least to the break even or slightly above it. Here, you need to be having a very, very strict stop loss mentality, and I need to adhere to that in a very strict fashion. And when I say defensive, even medium-term traders and long-term traders, they shouldn't add fresh positions. And whatever you add, you should have a few weeks to, at best, to a couple of months time frame, nothing beyond that. And probably when I say defensive, you want to see if the rupee is getting weak, and then probably you can play IT stocks for the short term, or anything that's dollar sensitive. You might want to play that.
Okay, Bala, thank you so much for joining us and sharing with us your insights with respect to how to navigate through the markets in times like these.